Hey, everybody. Tyler is joining me today. We are going to talk about some of the stocks that we like in this new bull market that started this year. Before we dive in, please take a minute, click subscribe to my channel, and check out the link you see on your screen, fool.com/Frankel, for the top 10 stocks to buy right now from my sponsor, The Motley Fool. It's the best way to support this work we're doing here on YouTube. Again, that link is fool.com/Frankel. So I'm going to dive in because this is one that you've probably heard of before, but I think a no-brainer stock to own during a bull market is Shopify, ticker symbol SHOP. And Shopify really kind of, let's say, got a little too big for itself in the pandemic days. They essentially, and management admitted this, they essentially anticipated that the pandemic fueled e-commerce surge was going to last forever. Like it was never going to cool off when things got back to normal, and they hired accordingly and things like that, and ended up really just kind of just too big of a company for its business. Now, they've done a good job of right sizing things over the past year and a half. And one thing that's really worth pointing out is that their growth never really went away. Um, Despite what the stock price did from peak to bottom, Shopify maintained a 20% plus growth rate throughout 2022 and 2023, which is a pretty tough environment for e-commerce companies to grow. So in 2023, its revenue grew by 26%. It generated almost $1 billion of free cash flow. Gross profit was up 28%. It got more efficient. I mentioned they had a right size the business. They also exited the shipping business. They divested that part of the business smartly, in my opinion. And the numbers just look strong. I mean, we know the American consumer is strong. Their Black Friday, Cyber Monday sales were the highest they've ever been, up 24% year over year to a little over $9 billion through Shopify's platform. And I don't think a lot of investors really appreciate the full ecosystem that Shopify offers. Just to kind of, they're not just a place where you can have an online store. That's definitely part of it. But along with their subscriptions, you can do things like payment services, so you don't need a third-party payment processor to handle that part of your business. There's Shopify Capital that provides small business lending. There's the Shopify app. There are kind of customer acquisition tools, like where you can make targeted offer campaigns. There's Shopify Shipping. Now they partner with a company they don't own. There's Shop Pay, which kind of works like the little PayPal checkout buttons you see on a lot of merchants' websites. There's Shopify point of sale services, where they actually make hardware for in-person shopping now. Big ecosystem is the point. And it's really designed to grow with its customers. A lot of the companies that are on Shopify have grown on the platform from small startups to through their IPOs and beyond. Just to name one, a company we recently did a video on is Figs, the healthcare apparel company. They were a startup on Shopify, and now they're a publicly traded company worth almost $1 billion, and they are still on Shopify. The solutions are designed to grow with their customers. Shopify considers the success of its customers as one of its biggest growth opportunities, because it doesn't really need to do anything once it lands a customer. If that customer, say, their business 10x's in size over a few years, Shopify is going to make more money because that customer is going to need more services. So just individual parts of the business are doing really well. The Shop Pay button, for example, has 150 million buyers right now. It has done over $127 billion of merchandise volume just through the Shop Pay platform since it rolled out in 2017. Shopify Checkout converts higher than its competitors like PayPal and things like that. Shopify is doing a great job with offline sales. Its rollout of the Shopify point of sale systems has resulted in a 5x increase in in-person sales since 2019. They're doing a great job with international growth. Subscription services are a great business for them. And Tyler will love this, they've started to get their stock-based compensation under control, which a lot of companies were late to the party with that. Shopify kind of recognized the need to do that earlier. Their stock-based comp was down by about 40% in 2023, which that's pretty nice to see. A lot of the companies that we were saying had out of control stock-based comp in 2021 are still out of control today. So that's heading in the right direction. And the business is just, a lot of big growth opportunity. There's a lot of, there's new small businesses being created every day. They're growing with their customers. They're not that present in a ton of international markets yet. I think between the US and Europe, it's about 80% of Shopify's merchants. So a lot of room to grow, doing great. They're profitable. They are growing at a 20% plus rate and are anticipating that again in 2024. So I think this is a stock that you kind of need to own in a bull market. Tyler?
All right. So when I think of no-brainers, I want to find something in a growing industry that's trading for pennies on the dollar. And right now, that is solar panel maker Canadian Solar with the ticker CSIQ. One of it's solar panels have been, I guess you could say, one of the parts of the market, at least in 2023, that didn't look so hot, right? We saw rising interest rates, kind of cost of capital went up. And as a result, there was a lot of kind of scare in terms of development of solar projects, especially on the residential side, people putting on rooftop solar at their houses or like smaller commercial, like, on top of a Walmart or something like that. Those went down considerably in 2023 because of higher cost of capital. If you have to borrow to put one of these things on at 3%, it looks much more attractive than when you're trying to do it at 7 or 8%. So the simple math there said that a lot of solar was going to go down. However, on the utility side, basically like the very, very large scale projects, the industry has been booming. I did a previous video with our friends investing unscripted over there. We talked about First Solar, a business that probably has about 5 to 6 years worth of project revenue backlog of like they basically can manufacture for 6 years straight and not fill all the orders that they have for their business. The similar thing we're seeing over at Canadian Solar. This is a panel manufacturer. It's Canadian headquartered, but a majority of its panel manufacturing is in China, which for some, I think, American investors, this is kind of a little bit of a faux pas because we've seen like things like, tariffs on Chinese panels coming into the United States. However, Canadian Solar is a global supplier of solar panels. Only about 22% of its total sales are actually in North America. So it can sell anywhere else without any of these tariffs or barriers that we're talking about in the United States. And it has in 20 cumulative module shipments is about 118 gigawatts. So it is a major scale player. And right now it's currently has about 8% of the global market in terms of total panel production, right? One of the things that I think a lot of people also misunderstand about Canadian Solar is not only does it produce panels, it also develops its own projects. So rather than just sell panels to a developer, it'll develop the project in-house and then sell like a completed project. And that can kind of like, that's very lumpy business, right? When you sell one, it's a big revenue spike, but kind of in between it can go up and down. And so as a result, it can make its results look kind of lumpy. But, all things considered, this is a business right now that even in a decent year, if not great year, it trades for about 4 times earnings and has trades for 0.4 times tangible book. It has about $3 billion of cash and restricted cash on the books. And this is a $1.1 billion market cap company. And so it's really hard to not look at Canadian Solar, and just the value of its assets alone suggests that it's worth way, way more than what the market is pricing for. And I can see a time when, we could talk about interest rates going down again, but I think there's going to be another probably big solar investing craze again sometime in the future because we go through them every few years. But if you want to invest in this business, which is it has secular tailwinds over the next 5 to 10 years, we're going to see large increases in panel production and in solar installations. but it is an industry that goes through short-term cycles, and people that buy on the bottom of these cycles do much, much better than waiting until the hype comes for, oh, solar's back, baby, and then trying to buy these overpriced sort of solar companies. So right now, with a business that is very profitable and trading for pennies at the dollar, that kind of seems like a no-brainer to me.
I like that. Two different companies that we think are really good investments in a bull market, and for two very different reasons. So I like that. Thanks, Tyler. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.